2025. Hope you're having a wonderful time, whatever time it is, wherever you are. And I hope that you're doing good and doing well. And let's talk about what happened yesterday with Bitcoin and crypto. You'll notice, I'll cut right to it to save you the time. In yesterday's video, when I spoke with you guys, I told you that the RML, the 4-hour time frame of Bitcoin was still in mean reversion to the 3012 RMLR, which was to the upside around 126, 128K at the time. And that it was going, sideways basically for the next few days. And that the downside at the time was around 115K. And I told you that if there is going to be a mean reversion to the upside, that you would take your profit at the RMLR, or if there's a dip going back down towards the third band again, to take your profits before it hits the third band, because the probability is that it wouldn't actually hit it. But I said there's a possibility, of course it can. I prefaced the entire video by saying that there's always a possibility that it can do the unexpected, because that's what probabilities are all about. Right? There's always a probability that something unexpected can happen. Now, if you know how to use the RMLR, oh wait, let me answer the video's title question first. Right? Is the RMLR broken? No. In fact, it performed exactly as you would expect it to perform, as it should perform. It really did what it is designed to do, right? So, for example, if you actually took your profits before it hit the line, you'll notice it did not dip that far below the line. It was a couple percent or whatever, and then proceeded to bounce right back through it, which is exactly what it does a huge majority of the time. When it spikes through extremely improbable outliers, as it did yesterday, it will very typically bounce right back, right? Whether it's to the upside or the downside, which is why we use the outer band and the RMLR as guideposts, because you're not trying to get you're not trying to nail the exact bottom or the exact top, because you probably won't, right? Especially not if you're running, trades yourself, or even if you're using some kind of a bot. Oh, hello there. I see you. Sweet stuff. Thank you. Hello. So, is the RMLR broken? No. Did it do exactly what it should have done? Yes, absolutely. Did it show us that the asset went back through the third band to the downside? Yes, it did. And then what happened with Bitcoin, and by the way, many other altcoins, some of whom fell like 80%, 90%. I was looking at Bonk meme coin. It's always a fun meme coin I enjoy looking at. It dipped like more than 80%, right? From yesterday's high to yesterday's low was like 85% or something crazy. So if you got in at 0.003 for the Bonk 1000 coins, right, and now it's at 0.014 something, you've like more than doubled or tripled, like almost 300% gains on that bounce. But of course, if you didn't get the exact bottom, as most people did not, clearly, in fact, most people just got wrecked if they were in trades, right? And if people were in long shorts, even a lot of them probably did not take their profits at the bottom or even near it, right? But still, hopefully, if you were in a short, you did do as I was saying, which was to take the profits before it hit those bands, because it spiked through them like on the 4-hour time frame and spiked right back up. In the case of Bonk, that wasn't the case, that it necessarily was that it was highly improbable. Like the probability that it would hit that outer band was perfectly fine, because it was totally normal, because it wasn't in a mean reversion necessarily to the upside on the 4-hour. But on Bitcoin specifically, there was a mean reversion happening to the 3012 RMLR, and by the way, it's still happening, right? And if you look at what has happened since it hit that third band to the downside, bounced up, stayed below it. Like it bounced up, went through it, came back down, stayed below it a little bit, and now it's been a couple of candles since then, and is above the third band to the downside again. If you look at some other time frames like 33-minute, etc., or 30-minute, you'll notice that there are now mean reversions with the RMLRs happening back to the downside a little bit. In the case of, I think Bitcoin's around 111 or so. Okay, the 33 and 30-minute time frames. So certainly look for those particular movements happening within the next probably 12 hours or so. Could be as soon as 7 or 8 hours from now, maybe even sooner. Could happen at any moment, really. But there's a pretty decent probability of happening in that case within some hours. And some people say, "Oh my God, the market is collapsing. Everything's on fire." People are saying, "Oh, this is the top. The top is in. Sell everything." Listen, if you're trading, it doesn't matter. Right? If you were trading at the time that the market took a little bit of a dip, which by the way only was like slightly more than 10% from the high. Like it's not like a massive move in Bitcoin land, right? It's just not, right? We've historically seen much bigger moves to the upside and the downside, right? And people are panicking, oh, it's going to the downside. If it had gone up 10%, right? If it had gone up from 121K to like 130K or whatever, 133K or something, would people have been screaming, oh my God, it's all over for the bears? Everybody buy all into Bitcoin. No, you wouldn't see that. Yeah, you'd be seeing people who were holding longs celebrating, whatever. But today you're seeing people who were holding shorts celebrating. So if you're, if the reason you're feeling bad is because the market went down, it's probably because you were on the wrong side of a trade, right? Because like Bitcoin is still above 100K, right? For a coin, right? For one Bitcoin. That's a lot. Need I remind you? And we were at 100K, where the price is roughly now, like 114 or something like that. Like not that long ago, right? It's not so many days, weeks, or months since we've seen this kind of price action, right? It's frankly not a huge deal, but people love to freak out, and you will certainly, if you look at X today. Hello there. What's your name? It is Hri. I don't know. It's Shuri. Hello there. Anyway, hopefully I read the name half right. Anyway, so people are making a huge deal out of the fact that Bitcoin slipped 10%. Look, bonk slipped 80%, 85%. Right? That's a pretty big deal. But it also recovered. Like went back up more than 40, 50%. In fact, it's down now only 25% from the high, right? So it actually, like if you log the bottom, it's gone up a few 100%, right? Because it bottomed out at like 0.003 something. And for the Bonk 1000 mass I'm talking about. And if you, so if you long that bottom, went up like whatever it is, almost 300%, right? Which is significant. So congratulations if you had an order there. Fantastic. But if you didn't, it's still significantly less expensive than it was yesterday, right? By about 25%. Fantastic. It's times like this, when people are fearful, as Warren Buffett says, be greedy when people are fearful, and be fearful when people are greedy. And yesterday afternoon, right before the dip, people were pretty greedy, in the sense of we could see, right, from the buy pressure and the sell pressure, what was happening. We could see what the volatility and entropy was happening. And, everyone was like, oh, not everyone. There was a lot of chatter in the peanut gallery of the clown world that they read the news and they try to gauge market sentiment and all this nonsense. And they were all super stoked and sure that Bitcoin's going to go to 150 now and then 200. We told you in the alpha trading live stream yesterday what the probabilities were to the upside and the downside and sideways, as we always do. And once again, our probability targets hit. It's not because we're pulling it out of a crystal ball. It's because we're reading what the math says, right? And that's how the markets are run. Like we're not making that up, We're not just randomly spewing numbers at you. We're telling you the assets are likely to do this, that, or the other thing. with specific targets. Look, for example, where Bonk went on the VREs, right? It actually dipped below the bottom of the monthly, like the very bottom of the bottom resistance on the monthly, right? So it went beyond the 99.997 um, probability to the downside. So there was a 99.7% probability that it would not close below there for the month. And there still is, right? Because the month is still open. It's only 10, 11 days old, right? But it actually dipped below the very bottom of the entire monthly support or buy level, which tells you, right, that first of all, um, as as I told you guys at the beginning of October and even at the end of September, I told you we are very likely going to see some wild volatile action this month, just as we do in every month, but especially around this time of year when people tend to do a lot of trading. And don't be surprised to see massive moves to the upside or the downside. And this should not be a surprise to you at all. If you've been watching my videos, you know, I've been telling you day in, day out, keep expecting, because we just have an increased amount of volatility happening right now, increased amount of entropy. Like, there's always volatility, there's always entropy. But if you look at the slightly higher time frames, you can see what I'm talking about. Like, there are moves building up. So is this the very top of the market? Is this as high as it's going to go until the next bull run cycle? That's not how you trade, right? It's just not how you do it, right? If you want to successfully trade an asset or any assets, right, you have to do it by using the information that's relevant to the time frames you're trading. So it doesn't matter what the asset is going to do in a month or 3 months or half a year or 2 years or 5 years or 10 years. It doesn't matter if you're trading, right, which is low time frames. Normally, that's what traders do. Real traders do not hold positions for days on end. If they're professional traders at HFT firms, they're running trades in 0.2 seconds, right? They're not um, they're not holding positions for 4 or 5, 10 hours or days, right? Why? Because there is no benefit to doing that. There's no cost benefit, right, to holding positions for 4 to 8 or 10 or 12 hours at a time, or even days. Why? Because the assets are too volatile, right? Just look what happened yesterday, right? If you're an HFT firm and you let your trades just run overnight and all weekend, there's a very high probability that you just got wrecked, right? So that's why we don't do that. That is why when we say we're holding trades, okay, what is this thing doing? I don't know. No, boy. No. Well, I don't know what's going on here, but that's why when we say you got to hold the line on your trades and dump them, as soon as the trade is over, and that your trade should be quick. It should be relatively speedy. Why? Because exactly from what I said, right? The volatility is too great to be holding on to these assets. Hold on, let me go ahead and do this. Okay. All right. Yeah. Okay. I don't know what happened here, but there we go. Well, something happened. Anyway, the point is, right, if you are holding positions in volatile assets for multiple hours or days, then you are very likely going to find yourself at a loss at some point. and usually sooner rather than later. Right? It's just a fact. Like, you don't have to like it. What is this? I don't know how that works. That's pretty cool. Okay, am I back? I am here. Okay. So weird. I don't know if you guys heard the last few minutes or not, but the point is, don't trade swing trading positions in crypto assets, which are extremely volatile. Right? Like, if you were an HFT firm, like I said, and you were holding a position yesterday and you didn't close out your positions, then you're probably wrecked, or you probably lost massive amounts of money, which is exactly why they don't do that. Right? HFT firms get rid of their positions fast for the very simple reason that they are in fact running trades much faster than that. Right? They're not interested in holding positions um, for a very long time, precisely because of the volatility. Right? It's the volatility that eats their trades. It's the volatility that will destroy their positions, and they don't want to have their positions destroyed. Right? They're in the business of making money, which means they run many trades very quickly. And sure, you can never run on your own manually millions of trades per second, obviously, but you can still use the same information they're running to run trades manually and win the vast overwhelming majority of your trades if you read the information correctly, right? And how do you do that? Well, you learn how to read the VEPs. You learn how to see where the VRE targets are, where the distribution targets are, where the mean reversion targets are, right? Once you learn how to do that, and you see the asset, okay, the asset's in distribution, so it's going in that direction. The asset's in mean reversion, so it's going in this other direction for now, right? Based on the correlation and everything else, right? That's how it's done, you know? That's exactly the same thing that the big bots are doing for these HFT firms and these quant shops, right? They're not randomly running trades just based on numerical targets of the price. They could care less about the price, it's completely irrelevant to them. The most important thing for these companies that are running these trades is to make sure that they're on target, right? That they're running trades according to actual risk reward based on the volatility, entropy, probabilities, and statistics, right? So they're managing their risk and they're running the targets to fit those risk management strategies, and they're making sure that they're not randomly just putting in something based on some chart or triangle, some chart art or triangle or Fibonacci line, which is meaningless and tells them nothing about the probabilities, right? They look at the probabilities just like we do. That's precisely why Bitcoin did what it did and will continue to do so. So now that it has dipped below that 4-hour 3 standard deviation band again before hitting that RMLR band to the upside, now there's actually an increased probability that it will actually complete that mean reversion before hitting those bands again, right? I mean, once it stops hitting it for a couple bands, for a couple of candles, which I believe it has already done by now, if memory serves me correctly. Maybe I'll check that in the next minute. Let's see if we stick around here. Hey guys. And that would mean very effectively, right, that Bitcoin is basically operating normally, right, in many ways. And everywhere, really. Like the RMLR is basically operating normally, right? Volatility is operating normally. Entropy is operating normally. Probabilities are operating normally. All things, statistics normally. There's nothing significantly unusual about having 10% dip on Bitcoin. They're distant. Look at the history of Bitcoin. Go through it. See how many times we've seen, you know, significant dips of 10% or more that recovered very nicely, right? And also, even if it doesn't recover, let me remind you, as traders, we don't care. Hi, Jenny. Hello. We don't care if the asset is going up or down or sideways. We don't care. It's completely moot, right? What actually matters here? Let's take a quick look at the 4 hour. The 4 hour, yeah, has now had more than, it's actually now on the 1, 2, 3, 4, 5. It's on the fifth candle already since it stabbed through that line. And like I said, it bounced right back up through the line. It actually didn't close below it, right? Like I said before, it closed below it. It didn't. Right? It stabbed through it and bounced right back up. Okay. Now the amount you would have lost out on if you cashed out, if before it hit the line, by the time it actually hit the line to the actual bottom, was like a 5% move. But guess what? The move from the top of yesterday to down where it hit that move was more than 8%. So you already had more than 8% in the back when it hit that line or came close to it. Right? It was like 8.4%. So you would have gotten out at like 8% as an 8% move, because that was right around where you had the third band. Sorry, we had the third Laplace distribution, right? The 99.7 Laplace distribution on the 4 hour was right around 8% from the top of the day down to there. Right at around 112.4 thousand. And it dipped, yeah, down to like, depending on the chart you're on and stuff, but like about 105.6 on the index, right? Some charts it was 100, some charts it was 102, some charts whatever, but like 105, okay? Went down to 105 and then proceeded to bounce up back through that band. And it has not hit that band again, right? Why? Because it's in mean reversion. And there is an increased probability now that it will hit that RMLR before it hits that band again. Could it hit the band again? Like I said, I always say, there are always probabilities, upside, downside, and sideways. It doesn't matter what, there are always probabilities. But there is an increased probability now that it has hit that downside RMLR band twice with a big gap in between, like a big number of candles in between before closing that mean reversion to that 3012 RMLR. So absolutely it could hit that, it could hit that band again. It's just an increasingly improbable situation. So the probability is it will complete the mean reversion. Currently, the RMLR is up at around 123.25K. But at some point later this week, Wednesday, in fact, it'll be right about where it is right now at around 112.24K, 25K, like 112 and a quarter, right? And in fact, it's dipping lower than that on by Thursday morning, or like, late Thursday night US time, around midnight, like the beginning of Thursday, right around 104, 108.4 currently. That's the current projection. The exact number will change because the line repaints, but it's heading in that direction. It's generally heading down now over the coming 4 hour periods from now until Thursday. Where will it hit exactly? And how will the line repaint? We'll see it candle by candle. We see it repaint, and we know the new targets, right? But currently, those are the targets and those are the guidelines, right? And at the moment, right, that RMLR, like I said, is around 123.3K, something like that. And the downside target of the band, if it were to dip there again, is actually a bit higher than the low it fell through yesterday. It's around 106.4. Now, could it dip 6 grand from here right now between now and the end of the candle, or even with the next candle, down to like 105.7, or tomorrow's low, right around 102.3 is where it's predicted to be. But again, that line will repaint. But still, could it go down there? Yeah, it could go down there. Sure, it could dip below 100K. Who cares? If you're trading intraday, you're trading low time frames, right? So you're trading 15-minute and lower. You're not trading half hour, 4 hour, 6 hour, 8 hour. You're not swing trading this stuff, God forbid. Because, I mean, again, imagine if you were swing trading this move, you'd be down a good chunk of cash, right? And if you put leverage on it, God forbid, right? Like somebody said to me, somebody in our Discord said, I wonder how many people got wrecked using 2x leverage. Well, I can tell you, if they were trading meme stonks or meme coins like Bonk or other ones that dipped more than 50%, everybody that was using 2x or more got wrecked if they didn't get out of their trade. And how fast did these dips happen? The most severe part of them, in many cases, I mean, look, it happened over a good 12, 16 hours, right? It wasn't like it happened all at once, right? But the big bulk of the dip, in many cases, happened in a matter of minutes, right? Like during the last big dip of the 4-hour candle, right? That was a pretty significant um, punch down, and that wrecked a lot of people. We saw billions of dollars of people getting wrecked, right? It was, what was the number? Some insane number was. Hang on. Let me just go double check this to make sure. There we go. Finding this here up in this channel and getting this out. Here we go. Okay, yeah. So in the 24-hour period yesterday, after the crash happened, more than $19 billion had been liquidated from 1.6 million traders, and the biggest loss was somebody who lost money on an ETH USDT trade on Hyperliquid. They lost 200 million. By contrast, there's people who also made 200 million shorting and then longing bottom. Like there are. So that happened. But yeah, 1.6 million traders. Like that's a large city. That's not a small city, right? Okay, not the biggest city, but that's a sizable city. Even in like a place like the US or even in China. I mean, it's not huge in China by any means, but 1.6 million people, like that's a lot of people who got wrecked yesterday, right? For $19 billion, right? And people will say, oh, it's manipulations, why are all the assets tied together? Why do they all move together? They move together, as I've explained bajillions of times, because the big bots, right? These huge algos that are run by thousands of people, you know, by like they're managed by staffs of thousands of people across the biggest HFT firms in the world and biggest quant shops in the world. What are they doing, right? How do they trade millions of trades in a second? It's programmatic. They're using computers to make their trades. So the computers are putting together many trades across the entire crypto market, right? So they pick and choose, but they like somebody's assigned crypto in this office. Okay, you trade crypto. Okay, so they manage the bot that has to do all the buying and the selling for the crypto in that, at that particular time, and their bot is buying up like every crypto in the top however many thousands of cryptos, if not million crypto. There are millions and millions of cryptos at this point. They're not buying and selling every one of them, but they're buying and selling the ones that have enough liquidity to support their positions, right? So that's what they're doing, right? They're running huge amounts of trades across the entire market. So yeah, and they'll move very often. It'll look like they're moving in lockstep because why are they all moving to the downside? Well, because the bots that they're running are running a bunch of shorts. That's why, right? Why? Well, because they see the volatility saying it's going to go to the downside. So that's what they're doing, right? If it's going to the upside, same thing. You'll very see these things go to the upside or the downside, and people will just scream and complain, and they'll say, "Yeah, when the markets are going up, everything's great, but when it goes down, it's manipulation." It's utter nonsense. By the way, if you run a trade, if you place a trade for a penny, right, on any stonk or coin or anything, you're manipulating the market. You may not be manipulating it as much as somebody running a trade for $100 million or $1 billion, obviously, but you are manipulating the market even before the trade runs. The moment the order hits the order book, the moment you hit to place an order, even before it's filled, the moment you're on the order book, you are manipulating the market, right? Every trade is manipulation because that literally is what it is, right? So it's not manipulation in some conspiratorial, conniving, like evil, way to control what's happening. No, it's manipulation because but the definition of manipulate. You're manipulating the market. You are putting your hands on the market to attempt to move it in the direction you want to go, right? And you're buying if you want it to go long, if you want it to go up. You're selling if you want it to go down. You're manipulating the market. So when people say manipulation, yeah, sure, every trade is manipulation. Call it that if you want, but it's not some grand scheme by the biggest bag holders. The biggest bag holders are smart with their money. They know how to make money, and it's not by conniving together, plotting together in some smoke-filled back room to get your monies. That's not what they're doing. What they are doing, very literally, is reading the same information that we read at Alpha Trading. They just have a different interface for it, right? They have a different way of reading that information, but it's the same information: volatility, entropy, probabilities, and statistics. That's what they're reading. That's what they're trading. Their bots just happen to read it for them and make the trades for them. And they manage their bots by looking at that information in a summary kind of way that tells them what their performance is and whether or not they should, change their targets upside, downside, whatever, or just not be in a position or hold their position or whatever it might be, right? But they're running trades extremely quickly, right? They're not looking at the individual trades they're running. They're looking at the overall summary of profits and loss that they're making every, 5 minutes, hour, day, whatever, right? Whatever time period they need to look at that and report that, right? So that is really all that's happening with the markets. So I recommend not panicking. Just because the market goes down is not a bad thing. In fact, you should love when the market goes down. Why? Because you can acquire more of the asset for less. Ever think of that? You're getting it at a discount. Right? And the only people who should not like that the market is going down are people who are holding a bunch and refuse to sell anything. They refuse to short, right? Okay, well, then don't make money when the market goes down. That's fine. And just hold it. And in another 4 or 5 years, you'll be sitting, or 3 years, or however many years, you'll be sitting in some nice profits again, right? If you hold this asset long enough, right? Whatever it is, like crypto, Bitcoin or something. Sure, plenty of other assets will disappear within the next 5 years. It happens all the time. We see assets constantly appearing and disappearing. And that's expected when you have literally millions of cryptocurrencies, right? Literally millions of cryptos and meme coins and all these other things, right? So don't be surprised, right, by these market movements. Learn how to read them, learn how to predict them so that you're doing okay no matter what the situation is, and that you're not trading with high leverage. Because again, these moves yesterday happened pretty significantly, right? And if you didn't get out immediately, if you were in a long at the top of the day and you didn't take your profit there, like right around the end of our live stream when we said this thing could go down, and literally the live stream ended and it all went down. If you didn't sell that area, you would have been losing your profits very quickly. And if you weren't already in a negative on your trade within like that first 4-hour candle, which is an extreme time to hold the trade, and you should not hold the trade that long, right? Like within the first 15 minutes, if you weren't out of that trade, if you were longing yesterday from the top, you should have gotten out of that position, because there's no reason to hold a trade for longer than that. You can always get in the next position. It's better to lose like 1%, right, than to lose 100% and get wrecked because you're holding some ridiculous position with ridiculous leverage and you got wrecked because the market moved. The dip happened. So yeah, that's all there is to really say about that. But the safest way to trade this stuff. Hello there. Hello. Hi, Asaf. Off. Hi, Jenny. The best way to not get wrecked in these markets is to learn to read the VEPs, right? And that's what we do at Alpha Trading. We show people how to read the VEPs. Like, that's our pleasure. We do that for free because we love to help educate people to learn the VEPs. So if you want to learn how to read the VEPs, come to the Alpha Trading Discord. It's free. alphatradinghq.com/discord. We give you free tools. We give you free education. We give you free access to all kinds of information channels that you need, and chat channels. And you can even join the live stream in the Discord or on the Rumble or whatever, but you can join it in the live stream and actually participate. Like, you can actually ask questions there. I mean, you can ask on Rumble, but we're not always monitoring that. But in the Discord, we do monitor, obviously, because we're in there doing the live stream. So you can ask, you can interact. Any questions you have, like, how does this work? How do I read this? What does this indicator do? How do I, what is this indicator telling me? What should I do in this situation? That kind of stuff. You can ask all those questions. What are the settings? How do I change them? What you do is you come to the trading, you come to our Discord, And you get your free tools by first of all reading the instructions when you get in the Discord. If you read those instructions, it tells you everything you need to know to start properly. First, you verify that you read the rules. Once you do that, you automatically get a role that gives you access to more channels and you see more information. And then you go get your free volatility starter pack of indicators and even a free chart that has all the indicators on them that you can just use on TradingView, no problem. It's like, that's where we give away the tools on. They're on TradingView, and then you can learn to trade the VEPs just like everybody in Alpha Trading does. And again, that's all free. Like we don't want anything from you. Like we're not here to sell you indicators. We do have indicators that people can buy if they want to, but we we recommend nobody buys them until they learn to use the free tools. And we don't care how long it takes you. It could take you a week, a month, a year, or 3 years. We don't care. We stay as long as you want. Like stay forever for free. Um, just learn to trade this if you want to be a trader, right? And this isn't for everyone because most people suck at trading and they shouldn't trade. This is for people who really actually want to be better traders and actually want to make money trading, which is again not something most people should even attempt to do because most people suck at it and they're going to lose their money at it. And the probability is you did too. Otherwise, you wouldn't be here on YouTube looking for a video telling you about a better way to trade. And that's exactly what we're doing at Alpha Trading, right? That's exactly why I talk to you guys sometimes a lot about trading because the information that's out there is utter garbage, right? And we get shadow banned like crazy. Every channel we do, every channel we put up, no matter what platform it is, we get shadow banned or muted. It's unbelievable. Why? Because we're telling you information, right? Which is like, it's not some secret conspiracy of information, but it is information that the very top firms in the world use to run the markets. And guess what? They own the biggest tech platforms on the earth. They are the biggest investors in the biggest tech platforms you can name, every last one of them. You think they want you to know all this? They very clearly don't. Look at how few viewers, like, look at all the crappy videos that people put out about Bitcoin, where they talk about utter nonsense. They put up chart art. They show you things that look familiar because other people put them up, but they have no statistical meaning. I tell you the statistical meaning. I tell you the probabilities, right? I tell you what all this stuff means. I tell you the definitions of things. They don't. They just show you garbage that everybody else is pushing, so you believe it because everyone else is pushing it. So you fill your brain with an echo chamber of garbage. And that's why you follow them, because you're like, whoa, hello there. Hi, Ankit. Um, so, why do people follow garbage? Because herd mentality is why they follow garbage. How to invest in crypto. How to invest in crypto? You buy it. You go onto an exchange and you buy some. Easiest way to do it. You go on to if you want to do it that way, right? If you have a credit card or something like that, you just go on to like Coinbase or Binance or Bybit or Kraken or whatever kind of exchange you have. I know I'm saying hi to you too. You go to any exchange you want and you just buy some. It could be a decentralized exchange. It could be a centralized exchange. You can buy it with other cryptos or you can buy it with fiat currency. Um, or if you know a guy like who's got a bunch, you can just send him some money and he or she will send you, if it's a guy, he'll send you back your crypto that if it's somebody you trust and and you're doing a face-to-face interaction, obviously. On which site? Well, it depends where you are and what the rules are where you are, Ankit. So if you're in the US, you can buy on Coinbase or Binance, the Binance US, or any other like Kraken or Gemini, or there's a gazillion like exchanges you can buy on. You have a Gagan, you invested about 7 lakh in IT ETF. Is it a good investment for the next 2 years? IT ETF? Well, it depends. Look at the volatility and the entropy and the probability. Could you have a ticker for IT ETF, Gagan? I don't know what the ticker is for that, but if you want to tell that to me, I'll gladly look it up and tell you. But investments for 2 years, okay, I'm glad. Investments for 2 years, that's investing, right? That's a completely different animal than trading. What I'm talking about here is trading, which is low time frames, okay? I'm in and out of trades in minutes. I'm not holding my trades for years. That's investing. And you asked about investing. I'm not telling you investing information like oh, buy this for the long term. Like there's many things that are kind of obvious in investing, like AI. Where am I from? Well, I'm American. I'm in Israel right now. Um, I'm American and French actually, and I'm in Israel. Um, so where what to invest in? Obviously, there's a lot of things in AI that are going to do well, and most things in AI will not do well. There's a lot of things in crypto that are going to do well, and most things in crypto aren't going to amazingly be all-time amazing things, right? That's like with any market. You're always going to have winners and then a bunch of losers, right? That's normal. Brad Norris, do I like Bitcoin? Do you like Bitcoin? You asked me. Yes, I like Bitcoin. I think it's very useful. I have always found it to be. I found it useful from the very early days. I was one of the earliest users of it, and it has always had a value to me in terms of exchanging values like information, okay, and archiving information for retrieval and for archiving and all that. You're from India. Well, good for you. Yeah, I think Bitcoin is great. Gagan, thank you so much. Can I trade U.S. stocks while being in India? Gagan, you should. Well, Gagan, it depends. I don't know what your situation is, but there are some companies that allow you to trade U.S. stocks if you're overseas in certain countries. If you can't trade the U.S. stocks directly, then usually what you do is you would go onto another site that lets you trade CFDs, right? Which are contracts for difference, which are basically a derivative of the stock that you want to trade that is tradable. It's like a clone of it, basically. It's like a virtual version of it, and it maintains basically the same price as the actual stock itself. And you are allowed to trade CFDs in many jurisdictions. I believe in India you can trade CFDs no problem. In fact, I'm almost 100% sure, but you can double. If you want, I will double check that for you. You know what? Let's double check here. Oh, no, you actually, that's weird. I was not expecting that, and I'm glad I checked. You cannot trade CFDs in India through regulated domestic brokers. However, some Indian residents trade CFDs through offshore brokers, right? But there are a lot of risks in that because of obviously oversight, etc. But so yeah, exactly. So you go online and you can trade CFDs through offshore brokers, but you got to be careful with that because you have to make sure you use a good CFD broker that isn't going to give you problems. That's the easiest way to do. Hang on a second. Hang on. But here we go. Ah, okay. So my answer earlier was about the stocks. You can actually check stocks, U.S. stocks. You can trade U.S. stocks through direct or indirect methods, meaning you're able to invest with a broker that provides access to U.S. markets. So you can use Indian brokers or international brokers. That's actually better than CFDs, right? Because that means you don't have to use a broker that's not regulated, and you actually can trade the actual asset itself. Um, yeah, so you definitely can do that. I mean, you have to remember that there's capital gains tax for U.S. stocks. There's all kinds of regulations and whatever. But as long as you follow the rules, no problem. You can do that. You made 7K on Spirit during COVID. Well, congratulations. Yes, you can trade Bitcoin. You can trade Bitcoin from anywhere, right? I mean, you have to. There are some jurisdictions where you might not have the legal right to do certain things with trading Bitcoin, but technically speaking, Bitcoin is tradable from anywhere because it's just a protocol, right? So as long as you have access to some place that allows you to trade Bitcoin, and it's legal for you to do that, because I'm not going to tell you to break your laws or something, but as long as you're in some place where it's legal to trade Bitcoin, and you should be able to access, at the very least, a decentralized exchange like BISC, BISQ, or Bybit's decentralized exchange, Apex, APEX, right, on the Bybit exchange, or many other decentralized exchanges where you can trade Bitcoin or Ethereum or any number of cryptos, right? And in that case, you can trade from practically anywhere, especially on a decentralized exchange, because decentralized exchanges are, after all, exactly that. They're peer-to-peer exchanges. You're not using a centralized exchange platform. You're using a decentralized exchange platform. So you can do that, and you can trade to your heart's content. Again, as long as it's legal where you are. I'm not going to tell you to do something that's not. But yeah, you're welcome. And anyway, guys, I'm going to get going. If you have enjoyed what I've been talking about, if you found this insightful at all, do me a favor, hit the like, hit the subscribe button, leave a comment, or share this, whatever. Help the algo gods get this video out to more people. You plan to become a millionaire off 20K in Bitcoin in 8 years. Okay, well, good luck to you. I mean, I don't know what your plan is. Again, you searched and found that there are many brokers in India that trade U.S. stocks, but they don't provide complete info. There's plenty of ways to find out. And just keep Googling what are the, search for the most reputable brokers, stockbrokers in India. I'm sure you'll find many lists on Google. I'm not going to have to. There's a lot of them, right? I'm sure there's a lot of options for you. Is there any way you can access U.S. markets and get full stat? Yeah, you can. If you're looking at trading, what do you mean full stats? What do you mean? Like the chart? You want to see the chart information? Just if you want the chart information, just look at the charts on TradingView. Go to tradingview.com. One word, tradingview.com, right? Go there and look at the charts. If you don't have an account already there, are you even a trader? Like if you're not using TradingView and you're in the trading business and you're a retail trader, look, there's like maybe a couple of like kind of competitors, but they're not going to have better charts than TradingView. They have the same exact information, and usually their time won't be faster than TradingView because TradingView is a partner of ICE. In case you don't know who that is, they own the New York Stock Exchange. Okay, yeah. So go take a look at that. And again, to get the free tools to learn how to actually read what's happening on the charts, not just looking at the price candles, because price candles are the most misleading things on the chart. Those are things that will deceive you. People look at the price candles and they think, oh, this is what's going to happen next. No. Price is a byproduct, right? It's produced by the returns, and the returns are produced by the volatility, right? So if you're looking at the price candles and thinking that's information that you can use to trade, it's not by itself. It's not. Am I a professional trader? I trade, right? I trade. I've been trading for many years. That's what I trade. I do other things too, right? I've been running a marketing agency and a technology agency since I'm like a little kid, which is many, many years. But I trade, and I've been trading for many years. So, do I work for a trading brokerage company? No, I don't work for a HFT firm or a quant shop. I work for myself. And I've been doing this for a very long time. And I've been into Bitcoin since the very beginning because like I said, I do other things with technology, and I've been into cryptography for many, many, many years, long before there was cryptocurrency, like Bitcoin. I've always found cryptography fascinating. So, anyway, it's been fun talking with you guys. Again, smash the like, comment, share, all that good stuff. Help the algods. I'll call them that from now. The algods. Tell the algods to like my videos. But I know they're not going to spread it far and wide. But maybe a friend of yours or something will watch this and learn something too, right? Or watch one of these videos. And that's it for now. I'll talk to you guys later. Till the next one. Take care. All right. Peace. Happy trading.